So you've got student loans, but you're also ready to buy a home. Can you do both? Absolutely. A lot of buyers worry that student loan debt will automatically disqualify them from getting a mortgage, but the truth is there are smart loan options and repayment strategies that make homeownership totally possible, even if your student loan balance is sky high. So let's walk through what you need to know about student loans, some income-based repayment plans, and how they factor into qualifying for a mortgage. When you apply for a home loan, lenders look at something called your DTI, or debt to income ratio. That's the percentage of your monthly income that goes towards debt payments, like car loans, credit cards, and yes, student loan payments. Even if your student loans are in deferment or paused, lenders are still required to calculate a payment amount based off of current federal guidelines. But here's where it gets easier. If you're on an income-based repayment plan, you might already be paying less, and that lower payment can help you qualify for more. IBR stands for Income-Based Repayment, a program for federally backed student loans that reduces your monthly payment based on your income. Your monthly payment isn't based on what you owe, it's based on what you earn. Payments adjust yearly. It's a great option for buyers with high loan balances and moderate incomes. The lower your monthly student loan payment, the less debt shows up in your DTI, and that can help you qualify for a home loan. The Department of Education recently rolled out a new plan called SAVE. It's replacing older IBR options like Repay, and it's designed to make your monthly payments even more affordable. Here's what SAVE offers: larger income exemption, more of your income excluded from payment calculations. There's no interest buildup, so as long as you make your monthly payments, unpaid interest won't pile up. It has lower monthly payments overall and faster forgiveness options for lower balances. So bonus tip, if you file your taxes separately from your spouse, your IBR payment is based on your income only, not both. Now here's where you need to plan ahead. IBR forgiveness. So if you stay on an IBR plan for 20 years or 25 years for graduate school loans, the remaining balance is forgiven. But here's the catch. The forgiven amount is considered taxable income in that year, and that's often called a tax bomb. Public service loan forgiveness, so PSLF. So if you work full-time for an approved 501c3 nonprofit like a hospital, public school, university, or charity, you may qualify for full forgiveness after just 10 years. You must make 120 on-time payments under an IBR plan. The forgiven balance under the PSLF is not taxable, but definitely talk to a tax pro about your situation, especially if forgiveness is in your future. So can you get approved for a mortgage while still carrying student loan debt? Yes, but here's what to keep in mind. Your monthly payment matters most. Lenders don't care how much total student debt you have, they care about the monthly payment amount. Use your IBR payment when possible. So if you're already in an income-based plan and the payment shows up on your credit report, that's the number lenders will use on your mortgage approval. No payment showing? Lenders use a default formula. If no payment appears on your credit report, FHA, VA, and conventional loans use a standard calculation. FHA, it's 0.5% of the loan balance. Conventional, so Fannie Mae, either the actual payment or 1% of the loan balance. VA may allow $0 payments if documented. So pro tip, always ask your lender to calculate your debt to income ratio both ways. You may qualify for more than you think. So if you're planning to buy a home but have student loan debt, here are a few smart moves. Get enrolled in an IBR or SAVE plan before applying for a mortgage. Keep documentation of your payment plan and current balance. Pull a copy of your credit report to see what payments are showing. Talk to a mortgage lender who understands student loan guidelines. Trust me, not all do. And if you're working for a nonprofit, look into a PSLF ASAP. So just a quick recap here. You can buy home with student loans. Income-based repayment plans like SAVE can lower your monthly liability. Forgiveness is possible, but tax implications vary. Lenders care most about your monthly payment, not the total loan balance. And public service employees may qualify for tax-free forgiveness in 10 years. Feeling unsure about how your student loan debt will affect your home buying journey? Book a call with me today, and I'll walk you through your specific situation, review your loan options, and help you create a game plan to get approved. Feeling unsure about how your student loan debt will affect your home buying journey? Book a call with me today and I'll walk you through your specific situation, review your loan options, and help you create a game plan to get approved. And hey, if you found this helpful, don't forget to hit that subscribe button for more tips on buying smart, borrowing better, and building wealth. Click the link below and let's get started.